So before we can ask the IRS for any kind of relief, so there's 3 things that the IRS insists on. First, no open bankruptcy. If you went through bankruptcy in the past and it's closed, that's no problem. But if you're still in the middle of one, the IRS simply won't move forward until that's all wrapped up. Second, no active IRS audits. If the IRS is auditing one of your tax returns, we have to let that process finish before we can work and get into the resolution. Third, being current. That means filing the most recent 6 years of tax returns. Right now, that's 2019 through 2024. And if you're self-employed, you need to be caught up on your estimated payments. Those are due 4 times a year. We'll go over those dates in the conversation. The key is that once we check these 3 boxes, the IRS now considers you compliant. And we can move on to the next step, figuring out how to make the tax debt just go away, or at least make it more manageable. So there's, again, 3 different ways that the IRS lets people deal with their tax debt. And which one is best for you depends entirely on your finances. The first option is a hardship, and it's officially called currently not collectible. This is for folks who truly can't really put anything down right now without failing to pay their rent or their utilities or other essentials. So we need to show the IRS your full financial picture with your bank statements, bills, income, assets, all that. And if you qualify, they pause collection. No monthly payments, no garnishments, no levies while you're in that hardship. The second option is an installment agreement. Now, this is simply a payment plan with the IRS. If you can afford to pay it over time, we set up a full pay agreement. But sometimes, if you can't pay it all, but you can pay something, we look into something called a partial pay agreement. And that's where you can pay some of it, and once it expires, you haven't paid the whole thing, but you have to present a really clear picture for your financials to get there. The third option is the elephant in the room, the pennies on the dollar program. You see it all over the place. This is real, but it's not easy. The IRS looks at everything: income, expenses, assets, even your future earning potential. And we have to prove that they can't collect any more than what you're offering before they settle. But the reality is, in 2024, almost 33,600 applied and 21% were approved, down from close to 40% in 23. So it's possible, but it takes a lot of work. So you got to have more realistic expectations. Big picture, phase 1 is about getting current. Phase 2 is about choosing the best path to go forward to get this tax debt behind you. So you don't have to figure this out on your own, and that's what I'm here for. I'll help you watch this video as many times as you need. Write down any questions and we can go over that when I give you a call. And we'll go over your situation step by step and that plan to move forward. My name is Josh and I hope this has been helpful.